Good morning. Hey. All right. Starting off a little quiet again. It was a grinder yesterday, lower into the void below. We're almost there. And it's an area. One of the things to point out here is the angle of retracement. Besides knowing that the turn that we covered yesterday across multiple markets, even on the other side of the world there, the reversal happened everywhere. This big negative weekly reversal bar. The angle that prices are coming down at. And when they come down at an angle like that, it typically takes a little longer to make a turn. You know? And it can be choppy. So today is Tuesday, maybe the latter part of the week. What we want to see is prices come down here, because that's the highest probability area where we should find buy setups. Where's my little pen thing? Draw. Not working. Hold on a second. Something up with Zoom there. Oh, shoot. Of course. Got to turn on the charts. I don't know. I got like a thing with turning these charts on sometimes. It's been a while, but there you go. So, this angle that the prices came down at, when they come down straight down like that, excuse me, it creates a void above. It's like, the way this gapped up and went sideways. The void is a momentum move and then sideways. So here we've got the momentum move down. There was a little back and fill there yesterday, and then continuation move down. So our expectation is that once it comes down here, we start to get some kind of bottoming process going, whatever that's going to look like. Now, typically, I like to see 2 or 3 days. V bottoms in a bear market tend not to work too well. Where you get a sustainable move up. But if we can get some kind of price action down here, which could be a little retest and maybe a tail or whatever it is, bar by bar analysis will tell us when it's ready to pop back up again. And then maybe, in the last week and a half or so of the year, we can get some kind of counter trend rally up into this resistance area. So what we'll be looking for in the next few days are stocks like I mentioned yesterday, NVIDIA. Yesterday we were doing some scans in the room there, and I came across through one of the scans, Sanmina. Where's my, hold on. Oh, clear this. It came down quite a bit, but it was in an uptrend. So, something like this coming down to support. This is the kind of patterns that I'll be looking for to make some kind of a turn and, little pop up as they get down towards some support areas. As we always do, we look at different markets to see. It was, look, it was in a nice uptrend. And on the weekly chart, it's still an uptrend. It's coming down. It had the wide range bar ending, but had this big long bottom, through 2001 and didn't do too much this year. And then it got going. And so it looks like a stock that can still perform. So I like that one. And NVIDIA is an institutional favorite. And that had a decent rally, had a momentary time above the 200, but they'll come back for this. And so we'll be looking for short-term trades and, something like this getting down here, a credit spread down below near the 50 probably would be a no-brainer as the markets get towards some support. SPX. Yeah. Well, yesterday I said it had to be below 3,800. It was relatively close. Let me just look over here. 37.50. My SPX. So I clicked something. $37.50. Okay, well, that's the area where we want to see it come down to. And as you've seen, McGraw, they're getting closer and closer. And so really what we want to see, and why I think it's could be a little higher risk, it's a decent distance away. So things have contracted a little bit, the ranges from up here. So the day-to-day ranges now are around 60 points. So let's call it 3,800, puts you right at the edge of where it would be. So it could be a little bit of a, catch your breath moment if it gets down there. 35 should be fine, because 35 is where we would want to be a buyer of futures. If it comes down into this area here, a little pattern like this, little bottoming pattern like that, with that type of a bottoming tail bar that takes out the low, that's always a go-to pattern for a bottom. An entry right above that bar. So, so this kind of a picture down here would be excellent. Looking for a larger move than what we saw yesterday afternoon. That was just a little short covering rally into the close there. So, yeah, I think 35 would be fine. All right. Well, the theme is we want to see prices, get lower. It's at this stall point right here, and what we see here this morning. Probably read about the yen rallying here. And so the markets are not doing much of anything, where you've got interest rates popping up, which we anticipated should happen here in this area of support. And the market isn't tanking, but you see the dollar going the other way, so kind of neutralizing things this morning as far as this was going up and interest rates were going up and the market was going down. Yeah. So, yeah, what I was mentioning about 3,800, it's a whole number. It's usually where that open interest collects and tends to be an area of support when it's that way. And just looking myself. Yeah, I mean, it's not huge. I mean, for today expiration, but it's bigger than the other strikes around it. Just going out to the next one. Looking on my other screen here. Yeah, a little bigger there. So a cluster of higher open interest at 3,800. So we'll see if it hangs around there. But once it breaks, should see an accelerated move. Once this breaks, I'm assuming it's going to break, because regardless of that open interest that's there, we want to see ideally as it comes down here, or we see. I got the 90-minute chart, so I could have squished that further down here to see that. But we'd want to see some bottoming process going on down here. Not, here we see the momentum slowing, and we define that by the distance between the turns getting closer together, where you had this really powerful momentums, and that says, hey, that thing's going lower, regardless of it trying to make a turn, and then down again, and you see the distance here getting closer together. And those that are looking at indicators, think about taking them off your screen, because this is what it's trying to decipher through mathematics, RSI or stochastics or whatever. All you need to do is look at the chart, and this one little tip will tell you that momentum is slowing. Now, when momentum is slowing and this starts going sideways in an area of support, now you really got something. And that isn't the case yet, but it's at this whole number, and it would have to start building support or break down failures So in any event, we're only going to be looking for some short-term move up. As I said, this angle of retracement is nasty, powerful. All right, other markets. This is getting closer to the level where we want to see it. Well, anything on top? Where's the premium? Just looking at it without even looking, I'm going to be looking for some kind of ridiculous level. I doubt there's much premium up there. $38.70. I'd say hell no. No. While I still think it has to come down here, of course, it's just too close for comfort. Why would I want to play with that? So Qs, we want to see it get down here. I'm starting to drop here as I'm speaking. As you can see, the 5-minute here starting to move lower. There is this pivot down here. So this one theoretically should reach its level first. It's been the weaker. Had a really nasty failure pattern there and the wide range bar igniting. So as it comes down here, held here before. So on a short-term basis, we expect it to hold there again. And then as we go into the end of the year and next year, probably not. Probably not. It's been the weakest. And the question as we get into the next year is, well, where will it stop? Because there's nothing underneath this. And I certainly don't even want to begin to imagine a replay of what happened in 2001, something like that. So, we'll get into this, but what we'll be looking for is other markets begin to take hold, like maybe consumer discretionary and FANG stocks beginning to reach their areas of support. And, this holds somewhere where we get one of those slowing momentum situations where this breaks lower. But hey, that's next year. Dow, focal point of those converging moving averages, the 200. Institutions will be focused on that. The support level is down here. So maybe it does stabilize for a day or so. What we want to see is it just go down there. That's the ideal. If it stabilizes here for a day or so, it creates another level of support or resistance, I should say, that it's got to get through once it makes the turn. So what we want is the easy money, right? Easy money situation. This is already broken through. So we'll make adjustments. The next support level is down here. And this was the weaker. The probability of this holding here with the others going on the, on the way down was relatively low, but you still got to mark off what's directly to the left. Transports on the way down to their destination. Here's your Head and Shoulders top. Just want to take a look at 13-week. Yeah, pushing back up a little bit toward that resistance. It's probably going to keep going. And Bitcoin holding for the moment, but look, you got a sell set up on the weekly. You got the support, so it's not an ideal situation where you've got 2 pivot lows here. And just suggests chop, more chop there. Silver, grinder. It's a tough one to try and hold. Well, if your money management is right, but when you see something come down like this, just makes it really tough to me holding on to something that breaks lower like that to think it's going to pop right back up again. You just got to put the blindfolds on and I guess go into hope mode that it's not coming all the way back down to the pivot low. Not my nature. Still consolidating at resistance. We call that acting well. Right? You say, what does acting well mean? That means it's at resistance and it isn't falling and it's recovering from range expansion bars like that red bar, which suggests, once this tightens up, what does tighten up mean? these wide whippy bars start to get smaller in range, more like this, and then it breaks out again, and it's got to tighten up. And oil, a little cell setup there. And so I think, look, we're either in for more of what we saw yesterday, just kind of sloppy, grinding price action as the markets work their way toward this support down here. And keep the powder dry. Don't get beat up, because we've all been there, look, waiting for the destination, doing lots of little trades, and you get beat up. And so wait for your pitch, so to speak. All yours, Dan. Is it me? Because I don't hear Dan.
Yeah, it's you, of course. Yeah, you started early on me. We have very light inventory. It's been more of a day traders market. We've been waiting for this turn Greg's talking about to get more bullish on longs. TBT, I sent an alert a little bit ago. We had a bull call debit spread, and a good little option quiz, if you will. We're long calls. So how do you protect your gains pre-market with the option market not open? Well, the answer is short stock. And why is that? Because a long call gives you the right to buy stock at the agreed upon strike price. So if I said to short it at 30.10, we've locked in our gains. If you do nothing and wait for expiration, we've locked in gains on half, is what I said. Let's see what we got over here. I just saw this going by, the ticker. Big gap up here, but it could be the start of a big old bottoming pattern. Look at this thing, ripped to 15 bucks yesterday morning and got smacked, but now it's a nice gap. This is not a 1, 2, 3 if we close with an inside bar, but to me it has the same effect because it's then a red bar ignored breakout. So keep an eye on that. What's going on with natural gas here? Man, look at this thing gapping down to this prior low. I don't know what's going on there. I'm gonna put that in a window. You're a captain. Yeah, Greg mentioned this Japan thing. And when I woke up, I heard CNBC saying, oh, Japan equities got whacked. So I looked at this and I'm like, well, this is not whacked. Is this Japan? This is Japan. EWJ. Yeah. So why is this not whacked? This thing's gapping up. WJ. I have no idea what this is, but this is not split adjusted or whatever. Something's weird here. I don't want to waste time now, but let's talk about it later. On WFC, I saw on the news. So this obvious, well, can't say obviously, but apparently it was news. Because this thing cratered here pre-market. They said the consumer protection people are giving them a $3.7 billion fine for being a bad boy. WFC of the big banks has just been the bad boy for the last 10 years. And so that's an ugly gap. Could set up for a day trade short. There's some housing numbers pre-market, building permits down way. Permits and starts worse than expected. That's gapping down, and obviously it's gapping down with the gap up in TBT also. Daku here, I set an alarm at 55. Bottoming pattern, but look at this, it blasted through two prior pivot highs, 20 and 50 curled up. So that is a beautiful bottoming pattern, and now it's a buy setup. So I'm just going to trail it over a prior bar's high and see what it looks like. All right, thanks, Alex. I'll open that page, and something's wrong with my, I can't open links this morning. We can't open this chart layout for you. All right, something's wrong with mine. I know I got to switch to Microsoft from this Chrome. And I think today would be the day I'm going to do it. Let's continue. I just wrote that link down. All right, so there's going to be a ton of counter trend trades once we get a reversal in the broader markets. And it's at the bottom of a trading range daily, but it's nasty weekly, monthly. But we're traders, right? So if this takes out a prior bar's high, I think it'll go up for 1 to 3 days. But I have so much to look at. You can set an alarm at 45 if you want, but once we get the turn, my initial go-to, unless something showing beautiful relative strength, like this actually, something above the rising 20 and 50, then I'll just, my first inclination is just trade the index ETFs. So this would be what I call a tier 1 gap. If this gap were only let's just say $14. I like gap breakouts that aren't too big. So that would be ideal. Then we're getting this buy set up, but the gap's too big. It's gapping to $17. So I'm not gonna babysit it. This generator company, GNRC, it was a potential bottoming pattern, but we never got what I call a something turn. It's just, this is a massive declining wedge in a downtrend. And today it got downgraded. I mean, that poor thing looks horrible. So 30-minute low, that could be a day trade short. GIS had earnings yesterday. And I actually, when, every day we look at potential earnings trades to trade options on, whether long or short. And this was one, because of the big run, daily, weekly, monthly, I was looking to sell out of the money options. But the $90 calls were just ridiculously low juice. But that's a bearish gap down to $83. Maybe if it sells off a little more, we could, well, I'll keep it on the list. There's our TBT rallying a little more here. I had moved here. Let me give it to you all. Well, two things. If you're late, this DGX I like. And then this TBT is what I posted this pre-market. Triple M was not earnings, but I think they came out and talked about them. There's so many topping patterns that are rolling over. Pool had an article in the Journal today talking about good fundamentals. And so do I read the article? No, because I don't care. But I pull up the chart to see if there's a trading opportunity. And my initial reaction was, the author of this article surely doesn't look at technicals, because this is another breakdown pattern, daily, weekly. So I have zero interest in pool. X-Cur, death trend, something's going on pre-market. I don't know, it's not my setup. SMCI gap in 83. It's a bullish gap, but there's no pattern. We'll come back to it in an hour. Charter, this is our only open position in the weekly options trader. Climactic buy setup with shorter than the money put spread over yesterday's high. It looks like one of these short-term longs. The weekly monthly is still nasty, but so many things have voids. I'm going to set an alarm here at 3:08. Set. Let's see what FT has for us. FND. In addition, are you talking about call spreads on these other ones, FT? The problem is it's just a horrible entry. It's down 5 bars on major supports. Splunk, at least Splunk has a little bit of a shock continuation bar. Win is better, and we did look at it. Greg flagged that yesterday. And whatever strike I was looking at yesterday was only like 30 cents. AWJ we talked about. Sam mentioned this one. So I mean, talking about relative strength with the market, the NASDAQ, the news said they're down 33%. Look at this, rising 20, 50, 200. Amazing strength right there. And here's the DGX I just posted. Greg mentioned this one yesterday. That's amazing strength. Now I called it anticipated breakout because yesterday's high is not a breakout. It's anticipating that it'll go through this, and it should not trigger if with the market capping down unless it's strong. FT, oh, there's a win right there. We just talked about it. JP Morgan, little, failed buy setup under yesterday's low as a continuation. AIG was another one, FT. Greg gave me a couple of these. And again, this could be a day trade shorts. I like it. Here, I'll put it right here. Day trade short, yesterday's low, AIG, I like a lot. Because see, it's a buy setup on support, but it's yesterday's bar is the game changer. It took out the high, range expansion, closing, breakdown, bearish, engulfing. So yeah, you can short yesterday's low, AIG, to start off as a day trade. Now, any new short swings, I would be keeping a very tight leash on just because of the, it's like this musical chairs. I think imminent, we're going to get this turn, and you can still ride it because it's bearish until it's not. EPC, Sam mentioned this one also yesterday. I set an alarm at 39.10 already, but that's another. Now see, that's a potent reversal. Yeah, definitely FT, unless it's just a day trade. But JPM is a superior pattern to Goldman. This is what we want JP Morgan to do, is take out yesterday's low and then do its measured move down. Greg mentioned MMP yesterday, another bearish engulfing sell setup. That's my couple of earnings trades here. Look at this McDougall from yesterday, incredible. This is a recent China IPO. DGX alarm just went off. So it's good to go. That's a very bullish 15-minute chart. It's if you want to wait 5 minutes, it's totally fine, as since the markets are falling, but it's relative strength. Relative strength, so it's a total judgment call if you just want to wait a few minutes. What else? Oh, there weren't many earning stocks. Now we're getting a gap down. I don't short $3 stocks, but this pattern, it's gapping here to yesterday's, low pretty much. This would be an ideal 30-minute low trade. Climactic sell setup, bearish engulfing, price void. I mean, if any of you short $3 stocks for day trades, I'm not, day trade, I have bigger rules than I do swing. But that's a beautiful bearish setup.